The post-COVID recovery has not been consistent worldwide, and each area deals with unique difficulties. One of the issues in Asia is that the region's export engine appears to be losing speed as the decline in the demand for goods continues. Export growth slowed to barely 3% on average over the past 6 months, down from a peak of 30% in April 2021. Subdued global patterns are pervasive in whatever method you choose to categorise Asia's exports. There is only general weakness regardless of the destination or the goods. 70% of Asia's export destinations are seeing a decline in demand. While exports to the United States are still doing well, the slowing of the American economy is also anticipated. The ongoing normalisation of consumer spending on products will also impact exports to the US. One can expect further declines in Asia's exports to the US in the upcoming months due to the weak overall demand. After excessive spending on goods during the pandemic, consumers are now putting their money into services, causing Asia's exports to go down. As an illustration, between January 2020 and March 2021, US spending on products increased by 20%. Since March 21, when it peaked, goods expenditure has been on a downward trend, falling by 5%. As the share of goods spending has still not returned to pre-COVID levels, continued weakening in this area can be anticipated. Investors should focus on nations where strong local demand balances out poor overseas markets. Asian countries like India, Indonesia and the Philippines benefit most from domestic demand generation. India's economy is the best positioned in this group for 3 reasons. First, a significant shift in India's structural narrative. Policymakers have shifted away from redistribution and toward increasing the economy's productivity potential and job creation. Secondly, after a period of adjustment, the Indian economy is now taking off. And third, in light of this situation, India is witnessing the release of pent-up demand, particularly in the housing and consumer durable sectors. But what about China, the region's largest economy? China is trying hard to boost domestic demand whilst exports start to slow down. But in this cycle, even if relaxing is already underway, the housing market issue and its COVID management strategy impede the rebound in domestic demand. It's prudent to think that by the beginning of next year, China's domestic demand recovery should accelerate as the full impacts of its stimulus take effect and private confidence rises as a result of China's projected transition to a living with COVID stance. Consumers continue to spend money on needs like food and household goods worldwide, and in some situations, they spend even more than they did before the pandemic. So whilst Asian exporting is under pressure at present, it is far from dead and buried. If you enjoyed this video, let us know in the comments below, and you can also like and share. For more content, you can subscribe to the channel and press the bell icon.